Global trade tensions are reshaping agricultural markets with tariffs, port fees and weather risks all converging to drive uncertainty. I'm Fiona Cincotta and today I'm joined by StoneX VP of Clearing and Execution of Sales, Bertrand Oesterle. Bertrand, a pleasure to have you join us today.
Morning, Fiona. Thanks for having me.
So please give us an update on the tariff situation as well as US port fees that we were discussing last week. Are we still looking at complex, tense market conditions, or have we seen any improvements?
So shortly after we met last week, we had a Trump announcement stating that the tariffs would be paused for 90 days. And that has calmed the situation in the sense that the smoke screen has evaporated, if I may put it that way. We've had this pause on tariffs putting the pace for negotiation, and some 130 countries have come to the negotiating table. So it comes to a point where some economists have even changed their view completely. Last week we were talking about inflation, recession, and some are now saying if Trump is successful, we could see a global tariff drawdown that would potentially make trade even more possible. And in the end, if Trump is successful, we could see some further demand and some further developments in terms of trade. So it's still very too early to say, but we are in a phase where people are saying that it is a respite. Now, in terms of the Chinese positioning, China is not on the negotiating table. They've said that they will go to the end, and they are firmly on the retaliation stance. So that is still something we need to digest and to see how it's going to affect us. Now, regarding the port fees, it is still a bit murky, it is still a bit uncertain, but the Trump administration has changed its stance. It's no more a firm $1.5 million per vessel, whether it's Chinese or part of a fleet that has a Chinese boat, per port in the US. It's going to be rearranged. We don't know exactly how, but it feels like what we've heard so far is that it's going to be on vessel capacity, so it's slightly different. And what has been interesting for us is that it may be that agricultural export might be exempt. So that could again create some demand or some flow.
Yeah, so I mean, there's still uncertainty there, it seems, as well, though, isn't there? Sort of with these exemptions potentially or potentially not.
So we'll have to follow the developments on this on that point, but it feels less panicky than it used to be.
So as China is firmly set on retaliation, how does this affect soybean?
So very simply, China is now applying 138% on US soy. So mildly, the door is shut. It's that simple. But what is interesting is that we've seen in the March soybean import figures from the Chinese customs a very big fall in numbers. So the March figures were 3.5 million tons only. It confirms what we were mentioning previously. China has front-loaded pre-tariffs. The tariffs on those imports are drastically falling. So 3.5 million tons, it means about a third less than last year at the same time. And when we see that drawdown, it will also confirm what we've seen in terms of export pace out of the US. So the US export pace was some 5% ahead of what we need to get to the USDA figure for the year. It's now 2% ahead.
So to stay on soybean, what did last week's WASDE report bring, and was there any update on the biodiesel front?
So the WASDE report last week was not so important for soybean. We saw what we expected. We saw some world stock figures going up a touch, and that was expected on the back of a larger expected Brazilian crop that brings more production to the world, therefore potentially more world stocks as well. That Brazilian crop is about 90% harvested, it's 52% contracted to be sold. So we got more or less confirmation of what we expected. Now, in terms of US stocks, those US stocks fell a tiny bit, a touch more than expectation, and that goes back to the biodiesel element. It feels like again the biodiesel demand is strong, and that we're going to have to watch out for the rest of the year if it remains firm or not. So we had some NOPA figure yesterday. NOPA is the association in the US that monitors 95% of the crush in the US, and the NOPA figures yesterday were slightly disappointing. And it shows that as the tariffs and the confrontation with China were being assessed, the last 2 months of crush were a bit tentative. But the disappointment from yesterday doesn't take away the fact that when we look at the overall NOPAC crush so far this season, it's still well ahead of the 5-year average, and it is still trying to give an indication that people expect the biodiesel mandate to be eventually revised up. So there's been a lot of pressure from the Trump administration, there's been a lot of pressure from the lobbies, and we're still awaiting an EPA decision as to whether we're going to go from 3.5 billion to 5.5 or 7.5. It's likely to be around the 5 mark. We're still waiting for an EPA decision as to what that biodiesel mandate is going to become. What we've seen from a fund point of view, from a spec point of view, some positioning with going long soy oil and a touch short in soybean.
And how about corn? What was the impact of last week's WASDE report?
So the report last week was much more interesting for corn. We saw a drawdown on US stocks in corn that was much more important than we thought. The figure came in at 1.465 billion bushels from 1.51 the previous month, and it comes to comfort some of the bullish element from the corn perspective, stating that we have tight stocks in the US, tighter stocks even, and that again comes to confirm what the bulls were saying in terms of having exporting countries with tight stocks overall. So when we look at the US specifically, the stock to use ratio is around 9.6%. It's a 3-year low, and below 10%, if we look at it historically, each time we've been below 10%, corn used to be above or well above $5 per bushel. We're not at that figure yet, we're still below. So the argument from the bulls is to say the stock to use ratio are tighter through this report. We know that the export pace has been very good out of the US, there's been strong ethanol demand, and so there's 3 arguments still to try to get a bullish element in corn. Against that, we've got the backdrop of the March 31st planting intention report that we had mentioned previously, with 95.3 million acres of corn. That corn is starting to get planted, and if it all goes well, then that new crop could come to alleviate this stock to use ratio tightness.
So we've spoken about soy and corn. What about wheat?
So wheat's been pretty interesting, and we've mentioned last week that we had, for example, in Paris wheat, a massive spec short of 262,000 lots. The specs have either been extremely lucky or have anticipated that something that we hadn't seen, and it's the euro dollar. So the euro dollar over the past 3 months has gone from 110 to 115.5. It's picked up in momentum over the past week, and we had mentioned over the past few weeks that we expected the short from the specs to roll from old crop to new crop. We expected the May SEP to go higher and then drop, and we've seen exactly that. So if I look at in terms of figures, we've seen the May SEP going from -2.5 to +625 throughout the roll, and once the roll was done, that is to say, as per yesterday's option expiry timing, that spread has gone down to -2.5 again. Last week I was telling you that the specs had been gaining from a timing point of view, and it was becoming a self-fulfilling prophecy in a way, and we're seeing just that. We've seen a May contract that was around the 225, 226 mark when they were rolling. That has now gone down to below 210, and it feels that having rolled into new crop, the market has gone down with the euro strength, and the funds have now a much more comfortable average. That euro is becoming a real issue from a physical point of view. We've got an Algerian tender. That Algerian tender is going to tell us if Europe can be competitive. We think it can't be. Now, beyond that, we had a bullish story that we spoke about over the past 2-3 weeks, with the bulls firmly saying that we would have a dryness issue. I had mentioned last week that dryness issue was losing some of its shine. It's lost even more of its shine over the past week. We've seen the US stating that the portion of the winter wheat area which is in drought is now 32%. That's dropped from 45% some 2-3 weeks ago. Then in Russia, we knew that the winter wheat had been planted in dry conditions, but we're coming out of dormancy, and that's coming out of dormancy is pretty good. 93% of the wheat is in normal conditions according to the Agricultural Ministry. despite the fact that we still have to wait for the assessment of that hailstorm that we were mentioning last week. And then if we look at Europe, I did put my boots on the ground, as we like to mention it, over the weekend. I went back to my native Alsace-Lorraine and went to the fields in rapeseed, in winter wheat, and the recently planted barley fields look amazing. The only thing I would say is some of those fields are dry. There's some cracks in some places. So we will need regular rain. And again, it's going to be about how much rain and how often we're going to get it. The polls, for example, for Eastern Europe were telling us that they've received very decent rain. So again, generally speaking, that dryness story has lost momentum. But when I speak to our bulls, they still don't deviate from the fact that they still expect a May to June rally as we did the previous years. So I'm going to try to find out what is that story that's going to cause that rally. And it could simply be a reversal of the euro.
Yeah, that's so interesting, that correlation with the euro as well, because we're very much seeing sort of the euro gain on those almost safe haven plays as we're seeing that selling out of the dollar. So definitely a place to be watching.
Absolutely.
So what are you going to be looking at going forward then?
So to come back onto wheat, I think that the euro-dollar element is going to be key. It's going to be a major point of interest. If we have to have a rally at some point, if it is not fundamental, it could be a currency reversal. So with the Trump tariffs pausing and maybe going to some sort of resolution, maybe the euro-dollar can go the other way, and if it does, it could provide the bull opportunity to see that short covering. If it doesn't occur, then we need a fundamental or weather event, which for the moment we're not foreseeing just yet. Now, in corn, I think that there's two elements that we're going to watch out for. The first one is obviously the planting in the US. It's only starting, it's 4% started in terms of area covered with planting, and we're going to monitor how that planting progresses. We've had some decent rains recently in the US. It is slowing some of the field work, I should say. We're only starting, it's not an issue. The US have got a huge mechanical capacity to catch up, so it's going to be monitoring that pace of planting. And then more importantly, we've got a Brazilian safrinha crop which is hitting pollination stage. So pollination is the key phase for the corn development. This Brazilian crop has received some timely rains at time, but overall it remains in need of water. So we're going to monitor how much that safrinha crop is going to get in terms of new rain or not, and whether or not it's going to change that bull bear element I was mentioning in corn earlier on. And then lastly, for soybean, we've got an Argentine story which is interesting to watch. Last Monday, the Argentine central bank put the peso back into free floating mode, and that caused the peso to drop. So that's going to be interesting for soybean, for corn and for wheat in terms of export potential for Argentina. If they've got a weaker peso, they might have a better chance to export. And specifically for soybean, I think it's going to be interesting to watch, because it is at a time where those Trump tariffs could come back on or not. It could be another opportunity for China to go away from the US, favor Brazil, but even potentially Argentina. And the Argentine soybean crop is starting to be harvested. So once again, it's a fundamental element. We're going to watch out how that crop is getting harvested and how much.
So plenty to be watching out for then. Thank you so much for sharing your insights with us. Valuable as always.
Thank you for having me.
For more insight like this, please do like and subscribe.